All right, so today we're diving into a technical analysis of a stock that's been making a lot of noise, and not exactly in a good way. We're talking about Strive Incorporated, ticker symbol ASST. This is a classic penny stock drama, and honestly, this analyst report reads like a detective story trying to solve a pretty urgent mystery.
And that leads us to the big question, the one that's at the heart of this whole investigation. You know, when you see a stock just absolutely plummeting, is that a golden opportunity to buy low, or is it a trap, just waiting to spring on anyone who dares to jump in? That's exactly what we're trying to figure out here.
And the situation is developing fast. On November 14th, 2025, the stock just took a massive hit, dropping over 6% in a single day. Now that's not just a little dip. That's the kind of move that gets everyone's attention and kicks off a huge wave of trading.
To put that drop in perspective, the stock is now trading at just under 75 cents. That is dangerously close to its 52-week low. When a price gets down here, it's often a sign that investor confidence has really taken a beating, and it can actually trigger even more selling. So yeah, the stakes are incredibly high right now.
Okay, so like any good investigation, we have to start by checking the vital signs. Let's get the lay of the land and see what the basic numbers are telling us about the health of this stock.
So what's really interesting here is the contrast. You look at that huge gap between the high and the low, it's clearly been a wild roller coaster this past year. But then you see the beta, which measures how volatile a stock is compared to the market, is only 0.461. That suggests it's actually less volatile than the average stock right now. But the number that really jumps out is the risk-to-reward ratio. At just 0.231, this report is basically screaming caution, telling investors the potential upside just doesn't seem to justify the massive risk.
And that brings us to our first major clue in this whole thing, the puzzle of the trading volume. We're seeing a ton of shares changing hands, but what does all that activity really mean when the price is falling at the same time?
And when I say a ton of shares, I mean it. Get a load of this. Over 117 times million shares were traded. That is an enormous amount of activity for a stock this size. So you have to ask yourself, is this just panic selling, or is this the smart money quietly moving in to scoop up shares on the cheap?
And this is where we have to talk about a key concept from the report, the volume trap. It's a classic pitfall. All that high volume makes it look like there's strong buying interest. So people jump in, thinking, hey, I found the bottom, only to get trapped as the selling continues and the price just keeps on dropping. It's a very, very real danger here.
So you can really see the two different ways to look at this. On the one hand, there's the hope, right, that all this volume means a big turnaround is just around the corner. But then there's the analyst's fear, that this is all just a speculative frenzy, kind of like a last gasp before the price really collapses. The report gives a serious warning that if this volume suddenly dries up, the people who just bought in could be left holding the bag.
All right, time to roll up our sleeves and get deeper into the data. We're going to start decoding the technical signals to see what the charts are really telling us. And this is where the evidence, for better or worse, really starts to pile up.
This table just lays out the problem perfectly. Think of moving averages as trend spotters. And in this case, it doesn't matter if you're looking at the short term, the medium term, or the long-term view. They are all pointing down. It's a completely unanimous verdict from these indicators. The momentum is just strongly bearish across the board.
And it doesn't stop there. It's like a whole chorus of different indicators are all singing the same sad song. You've got trend indicators confirming that sellers are the ones in control. You have momentum indicators, like the famous MACD, signaling a strong downward push. And maybe most importantly, you have other signals showing that way more money is flowing out of the stock than in. The evidence is it's overwhelmingly one-sided.
But hey, just when you think the case is closed, we get a twist. A couple of key indicators are giving completely opposite signals. You've got the RSI, the Relative Strength Index, which suggests the stock is oversold, meaning the selling might be overdone and a rebound is due. But then you have the MFI, the Money Flow Index, saying it's overbought, which can mean any recent buying is exhausted and a drop is coming. This conflict really just captures the chaos and volatility swirling around the stock right now.
So with all this evidence, some of it conflicting, where does the stock go from here? Well, the report takes all these clues and lays out three possible scenarios for the future.
First up, the bullish path. In this world, that oversold signal wins out, and the stock manages to bounce back, maybe up toward the $20 mark. But, and this is a big but, the report is crystal clear. The charts alone can't make this happen. It would need some real fundamental good news, like a shockingly strong earnings report, to give buyers the confidence to push it up.
Then, of course, there's the bearish path.
This is the one where that volume trap we talked about, snap, springs shut. The sellers completely overwhelm the buyers, the price breaks through key support levels, and it heads right back down to test that yearly low around 75 cents. This is the future that all those bearish signals are pointing to.
And finally, there's the neutral path. Here, the stock basically just goes into a holding pattern. The tug-of-war between buyers and sellers reaches a stalemate, and the price just kind of churns sideways, treading water, waiting for some new piece of information, good or bad, to finally break the deadlock.
So, after weighing all the evidence, sifting through all the clues, what's the final verdict? What's the analyst's bottom line on Strive Inc.?
Well, the report boils everything down to a single number, a technical score of 41.67, which lands it firmly in bearish territory. And this chart shows you exactly why. More than half of all the technical signals are flashing red for bearish. Only a tiny little sliver are bullish. The rest are mixed, which, just adds to the overall uncertainty and risk.
And this quote from the analyst's conclusion, wow, it really just says it all. The report admits, yeah, people might be tempted to speculate and buy the dips here. But the final warning is loud and clear. There is a high trap risk. That's the key takeaway. The danger of getting caught in another downdraft is the biggest factor here.
And so that kind of leaves us with this one big final question. The report says the key is for market sentiment to stabilize. But after everything we've seen, this mountain of bearish technical data, you really have to ask yourself, what in the world could be powerful enough to fight that tide and actually turn this story around? That, right there, is the million-dollar question.